The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Tuesday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN just after 9 a.m. Eastern Time. We got about 24 minutes to go until the start of trading. Quite the day yesterday. Charged higher through most of the intraday action from lows, basically when I came on the air. Right? Let's see what time we made those lows at. 9:40, so just after the opening bell. And then, boy, you had the S&Ps charged higher by almost 150 points this morning. We're giving back some of those gains because the S&P did finished barely in the positive. NASDAQ slightly red yesterday, but the Dow powered higher. Reversing today, though. We get the S&Ps off by about 0.3% or 15 points in the red at 56.38 this morning. You see, I was up in front of the computer, and yeah, only about an hour and a half ago, this market looked like we were going to be down almost 40 points at the open. So we'll see. We got volatility, that's for sure. NASDAQ 100, as I mentioned, only index in the red yesterday. And they today down by about 45 points or 0.2%, 19,392, and the Dow charged higher yesterday and slightly in the red by 160 points. But you talk about a run, man. It was 1,000 points from low to high yesterday. 41.4 to 42.4. Right on the dot, right? What did we get to? 41.423. So we actually missed it by 5 points. 995 points in the Dow. You charge higher yesterday, intraday. Today we're negative by about 0.4%. Now let's take a look at the daily on these indices. We'll talk a little bit of price and volume here, okay? And yeah, that was quite a bounce. We had expanding volume on each of the indices. You start off with the Dow. You do 132,000 contracts versus 118. Let's expand this volume up here for some clarity. But that's a bullish bounce there with volume. You reject lower price, you close higher. We'll see if we go. NASDAQ 100. We got green. You rejected the price we had on March 28th. You actually got back above the lows we had on March 13th. And you actually did it with more volume than you had on the 13th. So I've been talking about price and volume, and that's the first real indication that there was some strength there on the bottom. Rejects lower price. We get some volume. We'll see if we can get some follow through today. And then on the S&Ps, similar action, right? 2.1 million contracts. That's the biggest number since March 11th, and it's actually more volume than you did at the lows of March 13th. So we got some volume yesterday. You did it on a bounce, and we'll see where we go from there. Crude, catching a bounce as well, and we had some volume yesterday as well. Crude trading at 71.61. You charge higher yesterday with almost 300,000 contracts. How about it? Gold's not stopping, folks. Now, most of this action happened yesterday. We traded up to a high of, let's see where we were at the close, because we even got a little bit of an acceleration at the close. Yeah, you come into the close at about 31.60 in terms of the close of the equities. You charge higher to almost 31.80 overnight, 31.77. How about that? 31.77 at about midnight. Gold up by $17 on the session right now. You take a look at the daily. I've been talking about this one-to-one. I didn't think we'd get there this quickly, but boy, you're only about $150 away from that one-to-one expansion up to about 33.36 in the gold contract. We jump over to yields. The trend is continuing. Higher price, lower yield. And we're below 4.2 now. You're talking about a 10-year of 4.18. Okay, 4.18. And as you can see, critical area. Right, we're at a price point of 111.20 in the 10-year. We did get as high as about 112 back on March 4th, 112.01 to be exact. You got as high as 111.25 on the 11th. But as you can see, bumping up against that area, and that also correlates to where we were on December 6th. That high, right where we are, 111.20. 0.5, so half a point away. We were just above there, but watch that level. You break above there, you don't call it uncharted territory, but what's to get in the way if you trade above there, right? We have 115 out there from September, when yields were very low. And we'll see if we are heading back. Right now, though, 4.18 the yield on the 10-year, 4.18%. Jump over to the dollar. Continued strength, which is interesting in the face of yields continuing to drop. And I say continued strength as we've got a nice little bounce here. You get above 104.5 about, maybe we drift to 105, but dollar continues to catch a bounce. We're up 11 ticks right now at 104.32 in the dollar. All right, let's jump around this morning. We got a couple articles pulled up this morning, and we're going to kick it off with, let's see. We got a couple articles. Yeah, so that one's out there. But this is a good one from Bloomberg. And it's a long one. I'll put this one in the Tiger's Den, okay? I'll try and I will share a gifted article in the Tiger's Den of this coming up at the first break. But yeah, it's just a big picture look, and they take a look, and this is what I wanted to get down to. And they take a look, and it's in the age of tariffs. The Smoot-Hawley, tariffs have been brought up multiple times. That was in the 30s. It was protectionism, and it ended up sending us further into a Great Depression. Okay, many have said that these tariffs are going to be very difficult on the economy. Some have argued this time is different, okay? But what's intriguing here is how much larger imports are right now than they were. And oh my goodness, how crazy is it that we're talking about 100 years ago, folks? The 30s, we're 5 years away from that being a century ago, which is remarkable. So things do change. But in this case, things have changed where we rely on the imports as a much greater percentage of our GDP. You're talking about, 13, 14%, right? Down from 16% in the early 2000s. Yeah, you were at 3% in terms of what imports were doing to GDP. And you had protectionism back then. And that was harsh on the economy. Yeah, so imports of goods and services are 14% of the GDP, okay? Reciprocal tariffs, look at where we might be going, man, okay? So we're dealing with some exacerbated levels, and anything's on the table right now. That's the way I would look at things, because I look at this chart, and I look at the Smoot-Hawley Act and where tariffs went. I look at this chart and how small a percentage of the share of U.S. GDP it was, and then you look at the reaction that the markets had at the time. But yeah, reciprocal tariffs, you're talking about big numbers, man. And you're talking about big numbers when it's almost 16% of our GDP. And we'll see where it hits. There's a lot at stake, that's for sure. And then, yeah, they really break down. This is why I was reading this one late last night. What time did this article come out? Because I was reading it last night. 5 o'clock last night. Yeah, I was sitting at my desk about 8, 9 o'clock last night, doing a little work, reading this at home. And they break down trade deficit partners, U.S. goods deficit, okay? China, $295 billion. Mexico, $172. Canada down there at about $64 billion. And then they break down a number of those taxes. We'll talk about it when we get back, folks. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Morning Market Kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC. Welcome back, folks. We got the S&Ps off by about 13 points right now. NASDAQ 100 in negative by 44. You got the Dow off by 157. So I did just post that link of that article in the Tiger's Den, folks. If you haven't joined the Tiger's Den yet, check it out. We only charge $1, and basically that's just to make sure we're verifying people's identity, keeping spammers out of the Tiger's Den. But I posted that article because it's a cool one. You take a look at all the breakdown in terms of sliding down again. This right here, in terms of trade deficit, partners, value-added tax rate, you're talking about non-tariff measures, okay, and then total grievances in terms of where reciprocal might fall. Now you jump from that, which is remarkable, okay? A couple articles out here that tie into health. You have the 10,000 jobs cuts coming at Health and Human Services, okay? Emails coming from Deputy Assistant Secretary for Human Resources notifying people that they were terminated came around 5 a.m., okay? So this morning going on. So that's happening right now, 10,000 people out there. You have 82,000 people out there, but combined with the elimination and voluntary departures, you're going to bring that down to 62,000. Now, what's remarkable is you go from there, okay? Let's see, where are we? Not this one. Nope. And then you go, yeah, remarkable, right? So Howard Lutnick, I'm not a fan of Howard Lutnick. His comments on Social Security, folks, I don't know how anybody supports somebody that's saying that. The only people complaining about a missed government assistance check are going to be scammers, okay? Being a billionaire, and that's what you're putting out there. And people at his firm Reform, Cantor Fitzgerald, yeah, they put out quite an a note today. And boy, I can only imagine sitting around the room at Cantor Fitzgerald getting ready for this note, man. And this one's talking about RFK. And folks, with a 4-year-old at home, the tough part about this is, listen, I agree in terms of when people get frustrated with the role of the government, right, imposing. I lived in Florida. I live in Florida. I was very happy I lived in Florida during COVID because we still could do many things that people couldn't do in other states and all of the nuance that goes with that, right? But then there's the certain core fundamentals of childhood vaccines that have been around for a while. And, you know, as somebody with a 4-year-old that goes through them, I'm hopeful that that remains a mainstay of our society. So Cantor Fitzgerald puts out a note today that they call on the administration to reevaluate RFK's role, pushing out one of the most trusted leaders of the FDA to promote anti-science agendas a step too far, analysts wrote in an unusual note to clients Tuesday. So, yeah. An amateur scientist who doesn't appreciate the need for difficult public health policy decisions. And that's the tough part, folks. These are difficult. I get it. Right? There's no easy answer. I would say the nuance, the truth is always somewhere in between the two sides, right? The truth is very rarely on the far left or the far right. The truth is usually somewhere in between. The truth lies somewhere in between, usually, okay? And they're very difficult decisions because of the nuances involved. But yeah, nonetheless, and they say that it has nothing to do with stocks. That's the last part. Although the biotech tape may be roiled, and it was, you know, you had, what happened was is that you had one gentleman step down, right? Yeah, Marks. Who's this gentleman who stepped down? Yeah, Peter Marks, okay, the head of the FDI Biologics Division. And I read this. He came out and he said, you know, listen, I was hopeful, and that hope is now faded with everything going on. Okay, so he steps down. There was a meeting at one point they referenced where you're getting in all the scientists and they're looking at the strains. They're going to cancel that meeting. So there are good things going on that are much bigger than just a normal reframing of things. This is much bigger than that. And yeah, you got a measles outbreak going across the country. Okay, and you even have RFK coming out and saying in an op-ed that it's safe, but then you get the mixed messages, and that's where the difficult decisions, you really want someone leading it. But remarkable to see, you know, that Lutnick steps down as chairman and CEO, and yeah, only a couple months later, his analysts are out there saying that RFK's got to go. So we'll see when they incur the wrath, is what I would say. But those health companies, yeah. And this is where it really jumps to, okay? So you go from there to this article, okay? And talking about tariffs and healthcare. Now, this is a one that is a difficult conversation with nuance, okay? For more than 3 decades, the pharmaceutical sector has been protected from tariffs by a World Trade Organization agreement designed to improve access to life-saving drugs. It would make sense. One of the things that you really want to try and avoid is protectionism when it comes to drugs that can save. We saw how it played out in COVID, though, right? Who got all the first shots? All the most, the biggest powers in the world got the first shots, right? It wasn't some equal distribution. So I get it. There's nuances there, okay? But it is interesting to see how this is going to play out when you talk about tariffs and you talk about pharmaceuticals. Ireland is in focus heavily here, okay? They're a huge pharmaceutical maker. Ireland, good old Irish. The good old Irish. I got to make it to Ireland. Haven't made it to Ireland yet. My good old O'Brien. I got to get down there, have a pint of Guinness, and find some O'Briens. I'm sure there's an O'Brien on every block out there. Maybe, right? Protectionist policies will raise the prices of active ingredients, okay? Now, many active ingredients are outside of the U.S. Pharmaceutical industry, $311 billion in gross value added in the EU in 2022, okay? Nearly 90% of U.S. biotech companies rely on imported components for at least half of their FDA-approved products. The components are a big portion that are coming overseas no matter what, okay? One possibility is that tariffs will be determined by where a medicine's active pharmaceutical ingredient is made rather than where the final product is assembled. So this one is still in flux. Now, They talk about in this article that these companies have been a little quiet. They've started, even as everything going on with HHS is going on. You've seen the lobbying companies for some pharmaceuticals take a little bit of a step back, but that is probably about to change as this comes into the mix. Now, how long does it take to build some of these? 3 to 5 years, okay? Because you're talking about biosecure factories. This is not just building a factory. You're talking about biosecure, right, when you're building something like that. And then they talk about whether it's generics could be hit. You talk about insulin. Novo Nordisk and Eli Lilly produce a bulk of the insulin. Their supply chains are complicated, and moving enough production to America to supply the entire domestic market would be difficult, if not impossible. Insulin, one of the biggest things out there. All right, we're coming back for the open. We're going to talk a little bit more about this because this one's going to be an interesting one. We'll focus on some of these companies. We'll be back for the open, folks. Don't go away. We'll finish this conversation.
This year has already been a wild ride for the market. We started off heavily in the red, traversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs? Trade wars? Analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento for the second and fourth Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are March 14th and 28th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got markets open. S&Ps, we kick things off negative by about 20 points at 56.33. Today's going to be an important day, especially if we get confirmation of the bounce that we got with some volume yesterday, or if the market says it's a head fake. We want a little follow through if you're looking for some upside action, because that was encouraging. That's the first real time we've had a nice acceleration in volume to the upside. and you got it in all markets. We rejected lower price. You actually rejected lower price that we got below the lows. Things were getting a little dicey yesterday, especially in the NASDAQ 100, as you were cascading below the lows that we made earlier in the month in March, and we rejected that price. We'll see if we get some follow through today. NASDAQ 100 down by about 0.4%. Let's jump around to some of the stocks with action. Amazon, got a lot of heat to the downside right now in Amazon, man. Down another percentage point right now. You know, you could say saved itself a bit yesterday, but that's really not a save, man. You're trading at 188, down from 242, folks. That is a $54 decline over the period of 2 months, and you're talking about what, 54 forces, 22, 23% pullback in 2 months for Amazon shares. Now you're cherry picking highs. Okay, and when you get a pullback, it's always going to look dramatic, but still remarkable, right? Google shares flat this morning. We jump over to Microsoft, slightly in the red by about 0.3%. Meta shares, quite a pullback from Meta as well, from $740. Is that $165? Almost an identical percentage pullback to Amazon, 23, 24%. Today we're basically flat. You jump over to Tesla shares right now, up 2.8% to 266.28 for Tesla shares. We check out some of the banks this morning. JP Morgan down about 1% right now. Bank of America down about 1%. Let's see how some of the airlines are doing after quite the pullback yesterday. It's not stopping, yeah. So, of course, it comes out, number one, Canadian travel domestically, but just travel in general, man. Look at this pullback. As I said, never when, the market can always do more than you expect in either direction, folks. That's the one thing, that you gain experience. I still do. A great expression I like to use, right? You look at something and you say, what is the probability of this event occurring? This is a great lesson for outlier risk, okay? Because so much of trading and risk reward is mental, folks. So much of it, okay? You can teach somebody all the technical tools. You can teach them, price per earnings. You can teach them moving averages. But the ability to handle emotions is so much of whether it's trading. I learned this a lot in my life young when I was playing poker especially, okay? In a poker tournament, all right, and I'm jumping, but everything is risk reward in a poker tournament. And I played thousands of poker tournaments probably online. I played millions of hands of poker online. And it's amazing how often you have mental decisions, okay, and greed, fear, all of that comes into play. And you have to be comfortable with losses if you're going to want profits. And this is short term. If you're investing for the longer term, you don't really have to be comfortable with losses. You do, but you never have to take that loss. So it's a different scenario, right? You don't close the position. There's something about in your mind that you're not quite taking that loss. Even, if you're an investor in Amazon long term, you're going to be okay, folks. I could be wrong, okay? There's that possibility. Of course I could be wrong, but you're going to be okay in the long term on a company that you believe in that's going to be around. But on a shorter term basis, very difficult to close that trade, right? To take that loss. And so what happens is the mental fortitude of things plays a big component as you try and have the ability to make those trades when you need to make them, to take losses, right? And as it goes forward. All right, we're jumping around. We're going to stay on the healthcare for a second, okay? We talked about that one. Nope, we're going here. We're going to get to Goldman CEOs in a moment. We're not there just yet. Oh, come on, computer. We got too much going on, huh? No, that's not it. Shame on me. What did I just do? Here we go, the drug industry. Okay, so just a couple more data points because this is going to come into play. And you look at when this gentleman, his name Parks, I believe, resigned, okay, who was at the, is that the, all right. No, it's HHS one. Okay, so you have two stories of it, right? You have the Vaccine makers, of course, trade lower as that gentleman steps away. But then just the numbers of Ireland and Europeans, okay? Europe has the most facilities for branded drug ingredients. Factory count by location. Europe, 209. U.S. is only at 189, okay? Now, just 2 companies produce a bulk of the world's insulin we talked about. Some European makers already have a significant manufacturing footprint in the U.S. Okay, Roche, they have one, make their best-selling treat Arcrivis in the U.S., but transferring a complex drug to a different factory takes about a year. And building that factory can take 3 to 5 years, okay? And yes, this is where, until now, the drug-making industry has been largely optimistic about the Trump administration. The 2 top pharma lobbying groups have been overwhelmingly supportive, even staying silent during dramatic cuts, okay, to the health agencies, but that's about to change. Trade groups have started to break rank. You have the Pharmaceutical Research and Manufacturers of America releasing a statement Friday that warned tariffs would make it harder for companies to invest more in the U.S. There's been a stockpiling, just like anything else. Ireland's exports to the U.S. were up 81% in January. You better believe it. If you're importing anything from anywhere, man, you better believe that you just bring it in early, right? Ireland has the second largest trade surplus with the U.S. among EU nations, okay, not counting China, Canada, Mexico, $72.6 billion. Now, getting down to a couple more numbers here. Here we go. Kinsale, is that how you pronounce it? I better get Kinsale on Ireland's west coast. Is that how you pronounce it? Is the only place where Eli Lilly does the first production step for its best-selling drugs, Mounjaro and Zepbound. The only place. So, yeah, you better make sure that you're paying attention if you're an Eli Lilly, folks, okay? Because if Mounjaro and Zepbound are going to have some problems, then Eli Lilly's going to have some problems, right? It's remarkable when that is going to hit the fan, to say. And, yeah, so dude says, for every anti-tariff article, there's a pro-tariff article. Doesn't mean they're on equal footing, dude, okay? That's for every opinion, there's a contrary opinion. It doesn't mean that they're valid opinions that are based on factual data. I wish the conversation was a little bit better shifted to the short-term pain that's going to have to take place for longer-term benefit. That's my frustration. All right, I got a son that's 4 years old. I'm all about long-term thinking right now. I'll be okay for a year or two. Tommy will be okay for a year or two. We'll be okay for 3 or 4 years. If you tell me that in 10 or 20 years, it's going to be far beneficial. Nobody's out there saying that right now, okay? The Wall Street Journal. They're out with an opinion piece. It should be a factual opinion piece.
Many trading
and they're basically saying, what is all this talk that we're going to raise $6 trillion in taxes, and nobody is really talking about where that money's coming from or how it's going to work. So you have Peter Navarro talking about $600 billion a year is what they're going to raise in revenue for the federal government. And we're going to break. We'll be right back, folks.
Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at direction.com. Read carefully. Distributor Foreside Fund Services, LLC. Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. S&P's off by 20 points right now. NASDAQ 100, you're off by 50. The Dow, after being the power horse to the upside yesterday, actually leading the way in negative territory, off by almost 0.7%. The Dow off 271 points. Yeah, look at Walmart, man. Walmart is strong. If you're worried about what's going on in this market right now, I was talking about yesterday, right? You look at this market, you look at where you can find a little bit of protection, and it's happening again. Walmart. Up 1% right now, up 83 pennies at 88.64. So back to that article that I posted in the Tiger's Den, okay? And this is Wall Street Journal, and it's an opinion piece, okay? But here's the part I'm going to stress. And that's the part I agree with. You're talking about raising $600 billion a year, which is $6 trillion over a 10-year period. That's on top of what you're going to make from cars and truck tariffs, which is another $100 billion. So you're talking about a $7 trillion tax over 10 years, okay? And he also tried to claim, this is what I keep going, he also tried to claim the message is that tariffs are tax cuts. Now, what I challenge you to think outside of the circle here, folks, okay? And for decades, we've heard that when you get tax cuts, what happens for businesses? When you get tax cuts for businesses, what happens? Well, the argument is, just like we're going to hear to extend the Trump tax cuts, okay? Tax cuts fuel the economy, okay? If that's the case, then what's the other side of a $7 trillion tax increase over 10 years? It frustrates me to hear people in the administration, and not a fan of Navarro, talking about, and you know what, there'll be an article that contradicts this, okay, dude, but that doesn't mean it has any basis on truth, okay, because tariffs are taxes, period, end of sentence, that's it. By any definition, that is a tax increase, and the $600 billion figure would be one of the largest in U.S. history. It amounts to about 2% of GDP. It would take the federal tax share of GDP above 19%. The average since 1975 is about 17%. And even Democrats, they don't use even, but that's what they're implying, who love tax increases. Now, that's the Wall Street Journal editorial, poking a little there. But, you know, to a certain degree, yeah. Republicans want less taxes, and in general, Democrats usually want more public spending that come with more taxes. Even Democrats haven't dared pass such a large revenue heist, okay? And so, you know, that's the part of what they talk about. And, you know, you look at tariffs in terms of where this is going. Yeah, in 2019, okay, small examples, okay, because Trump is out there saying, and they talk about the car companies, he doesn't care if people don't buy European cars because they're going to buy American. Okay. That's a solid stance. You want to make major changes, okay? I hope they raise their prices, because if they do, people are going to buy American-made cars. We have plenty. Here's the problem with that. And I'm just, we'll look at the charts, folks, but this is the big picture stuff that is going to come. You're seeing it hit. I'm not just harping on Health and Human Services. I'm doing it because of what might happen to Eli Lilly when all of their drugs made in Ireland for weight loss may be a problem, okay? You look at where we are right now in terms of the car companies, in terms of the impacts. When you talk about the car companies, okay, the administration, Trump, is putting it out there that, hey, we're going to raise tariffs, but if you're an American car company, you're not going to raise prices and you're going to get all the business. Not true. That's not how economies work. Okay, it's not how supply and demand works. It's not how profits work. Somehow we doubt American consumers will feel the same at a dealer showroom. Okay, 25%. It's going to raise car prices by some amount. Foreign car makers might absorb some of it, but some of that's going to be passed on. But what's going to happen next? What happens next is what has happened every time in history, okay? Mr. Trump also ignores the U.S. car makers are also likely to raise their prices. Go figure, folks, right? If your competition has to pay an extra 25% tax, why would you leave that huge area? Do you know what you're going to do? You're going to raise them just enough where you're still cheaper, but you're still making more money, okay? If Hyundai raises the prices of an export model made in South Korea, then Ford and GM may at first try to capture market share, but over time, the U.S. firms would be foolish not to raise their prices to increase profits, perhaps by some margin less than the increase on imported cars, okay? That is what is going to happen because it makes perfect sense, okay? That's exactly what happened when Trump raised tariffs on washing machines in his first term. Washer prices, 12%. That's what they went up, according to a 2019 study. And it did not matter where the machine was made. Do you understand? Everything normalizes. The price of American companies, they raise their prices because they have the ability to capture more profits. Now, the value can be made that, well, that's going to allow them to grow, invest, American companies. It's going to come with higher prices. There's no way it doesn't. That's how the world works, folks, okay? And Trump's comment of I could not care less, yeah. That puts it that it might be coming, and it might be coming, and yeah, for what it's worth. We've said that article. All right. Markets, look at this, NASDAQ. How about some green? NASDAQ 100. We get your bid on the open. We're about 100 points up from where we were just after the 9:30 open, and we're positive by 6 points in the NASDAQ 100. Dow, negative by 221. S&P's off by 5. Let's check out that gold contract. 31.65, record territory at 31.77 last night. We check in on silver. Yeah. Listen, things can change, folks, but if you're looking for some metals action, look to gold right now because silver's just not it. You know, great run, but compared to the run that gold is having, silver continues to underperform. Silver is not even trading where we were in October, folks, which was above $35. We're trading at $34.60 right now. We check in on copper, and copper looks to have rolled over. It has. We got a weekly bar last week in copper that takes you up to 537. You actually only closed green by about 1 penny in that weekly bar. You opened that bar at 509. You closed it at 510, and that was being all the way up to 537. So you gave up almost 5%, almost 5 to 6% off of the high. You did it on volume, and we're getting the extension lower. And I bring that up because if you're looking, whether it's Freeport-McMoRan or Southern Copper, two of the largest copper companies out there, yeah, they're looking like copper may have peaked. Freeport-McMoRan down another 0.5% today. SCCO down about 0.1%. And if you're watching SCCO, the problem here is you're trading into this bar, and you get a lot of volume in this bar from a year ago. Man, can't believe that is a year ago. But yeah, you talk about some gold companies, man. How about Harmony? Let's put it on a daily. And what happens here is that as this gold price goes higher, that is just straight profit to the bottom line of these companies. Look at this. In the last 4 days, Harmony is up from 12.70 to 15.09. You're up another 2% today for Harmony shares. Ooh, New Gold. All right, that's a dicey one. That one had been on a run. You get a reversal, down about 5.4% today for New Gold. We jump around to Eldorado Gold, up about 1.5% right now. Wheat and Precious Metals been on quite a run. Basically flat today. And yeah, Vista Gold My dad was a believer, and I am as well, in this company longer term, folks. But when you're in a company like this, that is so it's so risky, right? They're an exploration company, basically. But look at that, up another 2%. All right, folks, one more segment. We get the S&Ps off by 5. Coming back, don't go away.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We got S&Ps negative by 5 right now. NASDAQ 100 off by 18. And we jump over to Microsoft shares this morning. Trading up by about 0.5%. It is interesting. NASDAQ 100 negative by about 25 points right now, but Microsoft in the green by 0.5%. Amazon, they were negative, but claws it back to about even. Apple shares, yeah, Apple's been doing really well. Great day yesterday for Apple in a negative market to start off the session. Closed dramatically higher in terms of where we were in the market, but Apple up another 0.1%. Jump over to NVIDIA, down about 0.5% right now. But yes, I talk about Microsoft because how about OpenAI, right? You got to talk about it. Now, there's 2 stories to this story, 2 angles to this story, we'll say. So they close a $40 billion funding round, the largest private tech deal on record. Now, where this is interesting is this is how much money they raised. Most of the time when you see this, you see it at a valuation of, right? They raised $40 billion. Companies do not need to go public anymore. Doesn't need to happen. Do you remember the days when you could just guarantee that you would get an IPO, and if you were a privileged customer of one of the big brokerages, you gained access to those IPO shares and they went up instantly? Well, you look at a company like CoreWeave, okay, and that's not the case anymore. As CoreWeave, what did they price at? $40? Yeah, and we're trading at $39.12 right now. Okay, so you're still a loser on CoreWeave. And there's a reason why, folks. Nobody is pushing paper out to the public unless they've gotten all the profit they think they can get from it. OpenAI is a great example. $40 billion, but $30 billion of that comes from SoftBank and $10 billion from a syndicate of investors that includes Microsoft. Now, I found myself saying, okay, now this, a big portion of that is going to go to the Stargate, which is SoftBank, OpenAI, and Oracle. So SoftBank's almost furthering their own investments, right? And we saw how that got them in trouble with the likes of WeWork and stuff like that. So be a little careful when you got SoftBank talking up the valuations of their own prior investments. And remember what they did with WeWork. $40 billion, though, OpenAI. Folks, thanks so much. Market's rolling over a bit. S&P's off by 17. Basil Chapman's coming up next with the Tiger Technicians Hour. We'll see you tomorrow, folks. Have a great Tuesday, everybody.